Are you waiting for the perfect time to invest? What if I told you that the perfect time is now? Let's unlock the secret behind knowing when to buy. Welcome to the Investment Nerds, your true guide to investing in the stock market in Africa. We've all heard the advice, buy low, sell high. Sounds simple, right? But in reality, it's one of the hardest things to do. Trying to predict the exact lowest point of a stock is nearly impossible. So instead of trying to be a market prophet, let's focus on a smarter approach. The real secret is not about market timing, but about time in the market and a solid strategy. Two schools of thought, how to decide when to buy. There are two main ways investors decide when to buy a stock. Think of them as two different mindsets. 1. Fundamental analysis. This is about understanding the true value of a company. It's like being a detective and looking at all the evidence before you make a decision. A fundamental investor believes that a stock's price will eventually reflect the company's real value. As the investor, you'll check things like the company's financial reports, its profits, its management team, and the overall health of the industry it's in. The aim of this approach is to find a great company whose stock is currently undervalued, meaning its price is lower than it should be based on its performance. When you find one, you buy it with the belief that the price will rise as the market corrects itself. For example, if you see that MTN Ghana is making huge profits and has a strong growth plan, but its share price has recently dropped due to a temporary market panic. A fundamental investor might see this as a great time to buy because the company's long-term health is still strong. 2. Technical analysis. This is about analyzing market trends and patterns. A technical investor believes that history tends to repeat itself and that a stock's past price movements can predict its future. A technical investor tends to study charts, graphs, and patterns. Technical analysts use things like moving averages and other indicators to spot trends and signals. The aim of this approach is to find a stock that is about to start an upward trend, regardless of the company's underlying fundamentals. This is often a strategy for short-term traders. For example, if a stock's price chart shows a pattern that has historically led to a price jump, a technical analyst might buy it, betting on that pattern to repeat itself in the short term. Which of these approaches works for you best? Remember, this is not a financial advice. Be sure to do your own research before taking any action. Comment technical or fundamental in the comment section below to indicate your choice. Like and share with family and friends. Follow and subscribe for more updates from the nerds.